So on an investment journey, you need to figure out things to invest in over time, and it takes a while to figure out, hey, what should I invest in? And so today I wanted to share a particular stock that you might want to take a look in. This isn't financial advice, but the stock that is curious is Enbridge. The ticker is ENB. And why I think this is interesting is that Enbridge has a fairly high dividend. The dividend yield as of today is 5.9%. That's almost 6%, and that's much higher than the dividend yield you would get from something like the S&P 500, certainly any tech stock. And it's a method, if you just buy the stock, you're going to get the equivalent of 5.9% year after year after year. And there's something called the law of 72, and that is you want to see how long it takes for your funding to double. Take the number 72 and divide your interest rate into it. So if you divide 72 by 5.9, that ends up 12 years. So just the dividend alone from a company like Enbridge will double your money in 12 years if you're reinvesting those dividends and using them to buy more stock each time you get a dividend. So that's really fun. That's really great. And it's easy to plan for. You just assume I'm going to get that 5.9% dividend month after month. Now, sometimes it's confusing to figure out the yield on a dividend. And companies don't pay percentages. They pay a certain number of cents per share. So the dividend is based on a payout per share. So when you do your initial purchase, let's say you bought $1,000 of Enbridge stock, they would pay a certain number of cents every quarter, and then that number of cents shouldn't change. It should always be the same unless they increase their dividend amount. So if the value of the shares goes up and your $1,000 turns into $2,000, you're still going to get that same number of cents per share each quarter, even though the value of the stock has gone up. And what that does is changes the yield. If your stock doubles in price, the yield will go down in half if you bought the stock after it had gone up. The vice versa is also true. If your stock halves in value, it's going to make the dividend yield go up if you bought the stock at the low point instead of when you bought it at $1,000 if you bought it for $500 or the equivalent of $500. So it's the dividends are still going to be paid the same. You get the same number of cents per share, whether the value of the stock goes up, whether it goes down, you still get the same number of cents. So once you lock in your dividend, you're pretty much going to get that dividend year after year. Now, companies also like to increase their dividends, so they like to keep it up with inflation. So maybe you'll get a 2% raise or a 3% raise or a 5% raise. So year after year, your dividends typically go up. So that's kind of an important concept to kind of understand. So what is Enbridge? Enbridge is a company that owns pipelines. I think particularly natural gas pipelines, and they're a really big company. They own a lot of the natural gas pipelines in America and also Canada, and they recently, within the last year, purchased the natural gas pipelines from another utility called Dominion Energy. They bought the gas pipelines from 3 different states. So they're growing their portfolio, and once they own those, then they just add everybody's utility bill onto their overall income. And you can't move natural gas around the country without these important pipelines. So chances are, if you have a natural gas furnace or a stove or some other appliance, chances are you're getting your natural gas through Enbridge's pipeline. And can you imagine life without natural gas heating in the wintertime? It's just not going to be pleasant. So you have to have these pipelines in order to move energy around the country. So there must have critical infrastructure that moves energy around the country, and so the chances are this company is going to continue year after year after year. And I would think that because pipelines, you have to have them, the value of the company will continue to go up. Hopefully at least it stays above inflation. So not only do you get a dividend, and hopefully the dividend gets raised year after year to stay up with inflation, but the value of the shares that you purchased should also stay ahead of inflation and maybe even go up further. So that's a way to get ahead in the investing world. Is you have the the value of your shares go up, but you're also getting the income from the shares, and that's a potentially positive way. So they say the stock market has kind of averaged 10% per year over time, and so with a company like Enbridge, if 6% of that increase is dividend, well, then the share prices only need to go up 4% a year to equal that 10%. So a little bit of share appreciation, a pretty good dividend, and it's not too hard to get to that 10% per year amount. Now, in growth stocks, the stock market may go way up or way down, and so some years you'll have a really negative investment. But with a company like Enbridge, if the shares go down, yes, they go down, but you still get that basic 5.9% dividend yield. And so it kind of smooths out any rough spots that might happen because you're always getting that dividend. You can take that dividend, you can buy more shares with it, you can live off of it. And so if the stock does go down and you're reinvesting dividends, you'll end up getting more shares from that same dividend. So it's kind of an intriguing way to think about it. Enbridge did grow last year. The last earnings per share update was 12%, so they were up by 12% from the previous time frame. They have a fairly low PE. I think the S&P 500 is somewhere in the upper 20s. That's the price you pay for the earnings. Enbridge's PE is just 16, so that basically means in 16 years' time, you're planned to get your full value back for whatever you paid. So PE is just 16, dividend yield 5.9%. They're growing as a company. It's critical infrastructure, so it might be interesting to look at as a potential investment to help you reach financial independence sooner. So again, not financial advice, but I'm just trying to share some of the things I've learned about that have helped me over the year. I am a shareholder of Enbridge, and I think it's a really intriguing company. So take a look, like, subscribe. We'll see you. Bye.